So we are still on the topic of not-for-profit organizations accounting. So again, these are the topics and the subtopics of the series. So we have already finished answering the question, what is a not-for-profit organization? That's why there is a check mark here in this one. Now, let's talk about fund accounting since NPOs use this one, and that would be after this intro. Again, we are now in the differences between profit accounting and not-for-profit accounting. So it's a fact that NPOs usually use fund accounting. So to illustrate what I mean, let's first start with the profit entities. As I am assuming, you already know that business organizations look like this. Assets equals liabilities plus equity, right? So equity is mainly increased by investment from the owners and mainly decreased by withdrawals by the same owners also. But sometimes it is also increased by profit from its own operations or the operations of the business organization itself. But sometimes the equity can be decreased by a net loss if the expenses exceed revenues. You already know that, right? So if you knew, I'm assuming that you know. So since you know that, let's go to the NPOs. So not-for-profit organizations look like this. Assets equals liabilities plus net assets instead of equity. The net assets here is composed mainly of two funds. One, the unrestricted net assets, which means the net assets that an NPO can freely use. And of course, the restricted net assets, which means to say that these net assets are restricted from use either temporarily or permanently. I will elaborate on these temporary and permanent restrictions on the next videos. But for now, let's answer the question, who places restriction on these funds? Answer, the donor. Actually, these two funds consist mainly of donations. So if the donor gives something freely or without any restrictions, like if Mr. Baby Glets gave $1 million to an NPO, but he did not specify any restrictions, then such funds will belong to unrestricted net assets. But if he gave it saying that the amount can only be used after 5 years or 5 years later, then the amount will be debited to cash but credited to the restricted net assets. So that's basically the main difference between the equity and net assets. Again, for profit entities, we use equity which can be affected by owner's investment, owner's withdrawals, and profit or loss from the business's own operations. And for NPOs, we have net assets instead of equity, which is composed of unrestricted net assets and the restricted net assets. Now, let's go deeper. Actually, unrestricted net assets is composed of many items, one of which are the undesignated donations, which are donations that are not restricted by the donor and by anyone. I have already talked about it a while ago, but anyways, we have our example here. So we have Mr. A donated $1 million to Bantay Baby Foundation without restrictions. So that 1 million is considered to be an undesignated donation. Another component of the unrestricted net assets is the board designated donations. So these donations may come from a donor which do not really give any direct restrictions as to the usage of the fund, but instructs that the fund be used in accordance with the wishes of the Board of Trustees of an NPO. So by the way, the Board of Trustees is the equivalent of the Board of Directors if we are talking about profit corporations. So the BOT are the ones charged with the governance of the not-for-profit organizations. Anyways, to make the board designated donations clear, let's have an example. So let's use this previous example. So in this example, If Mr. A donated 1 million to Bantay Baby Foundation saying that, let the board decide on what to do with the donated amount, then the funds will be classified as board designated funds, but will still be under unrestricted net assets. It will not become part of the restricted net assets because to be included in the restricted net assets, donors must place a direct restriction on the donation. So again, board designated funds are funds that can only be spent based on the wishes of the Board of Trustees, but they are still considered unrestricted net assets because to be part of the restricted net assets, again, donors' direct restriction is needed. Moving on, aside from these two, the unrestricted net assets is also composed of revenues and gains by the NPO itself. Actually, NPOs can earn revenues from its own operations. Like for example, a not-for-profit hospital can earn revenues from patients, right? So I hope that's clear. Well, we are in this point, but we still need to differentiate revenues from gains. So revenues comes from exchange transactions. Example, tuition fee received is considered as revenue of a not-for-profit school. The tuition fee is considered a revenue from exchange transactions because those revenues are earned by giving educational services. So, it's really an exchange, right? And aside from that, giving of educational services is an ordinary activity of a not-for-profit school, which is why, again, we consider tuition fees received from students as revenues and not gains or losses. Now let's go to gains and losses. So gains comes from incidental transactions like gain on sale of equipment or interest income on deposits of, for example, a not-for-profit school again. So this gain and income are considered coming from incidental transactions because they are earned but they are not related in the ordinary course or normal course of operations of the NPO. So logically speaking, a school, based on our example, or any other not-for-profit organization, was not created to sell some equipment, right? Or to invest to earn interest income, right? So, if they are not related to the ordinary course of operations, then they will be considered gains or losses and not revenues. So that's it for the third component, revenues and gains or losses. Another component of the unrestricted net assets is the expenses. But before we go to the classification of expenses, let me tell you in advance that expenses can only be deducted in the unrestricted net assets. There will be no expenses that will be deducted in the restricted net assets because it is assumed that all expenses came from unrestricted fund. Because logically, how can you use or spend the restricted fund, right? So the logic again is if it was recognized as an expense, it is considered spent and you can only spend those funds that are unrestricted. I hope that's clear. Now let's go to the classification of expenses. Well, what you are used to in profit organizations is the natural classification of expenses. Like, if the expense is all about rent, then the expenses related to that will be stored in just one account as rent expense. However, in the NPOs, the expenses can still be further classified into program or supporting activities expenses. So, this classification is called the functional classification of expenses. So, the expense is classified as program expense if its incurrence is directly related to the main purpose of the not-for-profit organization or for which it was created. Examples are expenses related to education if we're talking about not-for-profit schools or universities, or expenses incurred because of providing healthcare services if we're talking about healthcare organizations. Of course, supporting activities expenses are still incurred by the NPO, but their incurrence is not directly related to the mission of the NPO or not directly related to the main purpose or objective of the NPO for which it was created. So examples are expenses from fundraising activities and general and administrative expenses. But based on the standard, the NPOs are really not required to classify expenses by function. They can choose. However, if we're talking about voluntary health and welfare organizations, they are required to present expenses not just by nature but also by function. So that's a unique requirement by the standard for voluntary health and welfare organizations. So that's it. Again, in NPOs, the expenses can be further classified as program or supporting activities expenses, based on whether such expenses are incurred in relation to the main purpose or objective of the not-for-profit organization. So, if the expense is directly related to the mission of the NPO, then classify it as program expense. If not, then classify it as supporting activities expense. Okay? Another main component of the unrestricted net assets is the transfers from the restricted fund or the restricted net assets. I've already told you earlier that if there are donations or funds given, but with donor restrictions, those donations will be included here in the net assets restricted. I have also given you an example that if a donor has given $1 million to the NPO, but he or she said that it can only be used after 5 years, then that 1 million will be recorded here. I hope you still remembered. Assuming you did, then after 5 years, the limitation or restriction will expire, and the 1 million can now be used by the NPO. So if that happens, the 1 million should be transferred from this fund to the unrestricted net assets. So that's the story of this transfer from restricted net assets. Again, sometimes funds under restricted net assets are just restricted temporarily. So if the restriction expires, those funds will be transferred to the unrestricted fund. Okay? And lastly, we have the last component of the unrestricted net assets, which is the support. The unrestricted fund will increase if the NPO receives support like government support or government grants and the like. So that's it for the components of the unrestricted net assets. For me, you need to familiarize these components because you will need it in the preparation of the financial statements of the NPO. So to help you, I have here a mnemonic TUBERS. So T stands for transfer from unrestricted funds, U is for undesignated donations, B is for board designated donations, E is for expenses, revenues and gains for R, and lastly support. So that's it for this video. In the next episode, we will dig deeper on the Restricted Net Assets Fund. So if you learned, please click like, subscribe, and share this video. And you can also comment in the comment section below. So study well, and I'm sure it will be worth it. I promise.